The Cuyahoga County Finance and Budgeting Committee meeting for Monday, December 9th, 2019, hopefully the last one for 2019, will please come to order, and the clerk will call the roll.
Calling the roll, Mr. Miller.
Here.
Mr. Tuma.
Here.
Ms. Simon. Ms. Simon is absent at the moment. Mr. Gallagher.
Here.
Mr. Shrine.
Here.
Ms. Brown.
Here.
Ms. Baker.
Here.
We have a quorum.
Thank you very much. Item 3 on the agenda is public comment. Do we have anybody signed in?
No, Mr. Chair, no one is signed in.
Thank you very much. The next item is the approval of the minutes from the November 4th, 2019 meeting on page 3 of the agenda. Do we have a motion?
So moved. Second.
It's been moved and seconded to approve the minutes from November 4th, 2019. Any further discussion? Hearing none, all those in favor say aye. Aye. Any opposed say no. Ayes have it, and the minutes from November 4th are approved. Items referred to the committee, we have 3 items that are very closely related, so I'm going to ask the clerk to please read all 3 items into the record at this time.
Resolution number 2019-0276, authorizing the issuance and sale of County of Cuyahoga, Ohio, Economic Development Revenue Refunding Bond, Series 2020A, in the maximum aggregate principal amount of $11 million in one or more series to refund the county's Economic Development Revenue Bond, Series 2010A, originally issued for the purpose of providing monies to pay costs of projects within the meaning of Chapter 165, Ohio Revised Code. Resolution number 2019-0277, authorizing the issuance and sale of County of Cuyahoga, Ohio Economic Development Revenue Bonds, Series 2010B, in the maximum aggregate principal amount of $7,500,000 in one or more series for the purpose of providing monies to pay costs of projects within meaning of Chapter 165, Ohio Revised Code. Resolution number 2019-0278, authorizing the issuance and sale of County of Cuyahoga, Ohio Economic Development Revenue Refunding Bonds, Series 2010C, in the maximum aggregate principal amount of $16 million in one or more series for the purpose of providing monies to refund certain outstanding bonds issued to pay costs of a project within the meaning of Chapter 165, Ohio Revised Code.
Thank you very much. There are technical substitutes requested on each of these items from the administration, so I'm going to ask the administration to come forward and explain the substitutes, and then we'll take votes one by one and hopefully accept the substitutes.
Okay, Mike Chambers of Public Works. I'm going to invite up here Amanda Gordon from McDonald Hopkins to kind of explain the substitutes for each of you, and we'll be happy to answer questions.
Thank you. Good afternoon. I am Amanda Gordon, bond counsel with McDonald Hopkins. The substitute resolutions you have in front of you include some revisions that are basically definitional to make sure that the definitions among the 3 different series all reflect the same with respect to the non-tax revenues and those definitions, to make sure that they are conforming definitions with other parity issues that these bonds will be issued with, that were also issued with a non-tax revenue pledge. So they are basic conforming changes for definitional purposes.
Would it be a fair statement that the changes are minor and technical in nature?
That's correct, sir.
Okay. Any questions regarding the proposed substitutes? Okay. Do we have a motion to substitute Resolution 2019-0276, making it the version before the committee? It's been moved and seconded to substitute 0276. Any further discussion? Hearing none, all those in favor say aye. Aye. Any opposed say no. Do we have a motion for 277?
Were you making it or jump starting?
I'm asking for a
I
motion.
moved. All right.
Is there a second? It's been moved and seconded to substitute on Resolution 2019-0277 with the administration substitute that was just presented. Any further discussion? Hearing none, all those in favor say aye. Aye. Any opposed say no. And the resolution is substituted. Is there a motion regarding 0278? Is there a second? Been moved and seconded. Any further discussion? The motion is to substitute on Resolution 2019-0278 with the administration presented substitute. All those in favor say aye. Aye. Any opposed say no. The ayes have it, and for each of the three resolutions, we've now accepted the substitutes, and the substituted versions are in front of the committee.
Okay, thank you. So today, we'd like to ask for your approval, once again, under second reading suspension for these three bonds. We're trying to take advantage of the market and the availability to possibly save, or currently estimated at $3.3 million. We're going to have a slight PowerPoint for you in a second by Bob France from Stiefel. But overall, these bonds date back to 2010 for brownfield redevelopment. One was for commercial redevelopment bonds, and the other one was for the Gateway Arena. The par value of all of these are about $70 million currently. And once again, by taking advantage of the current market, we can realize some savings. We're going to go through a short PowerPoint with you right now, and then after, we'll answer any questions you have. Okay.
Please proceed.
Good afternoon. Bob Franz with Stiefel Nicholas, and financial advisor to the county. Great, already went. So just briefly, like Michael just said, all we're looking to do is refund existing debt with new debt for as much savings as we can possibly get. We're not asking for authority to issue any new money, just again, issuing debt to refund existing debt for savings. The first, the 2010A, the par amount of $17.16 million was issued in 2010. The callable par that we can refund for savings is about 10.5. 2010B, 11.1 was issued, callable par for savings that we can do about 6.775. And then the 2010C Gateway Arena project, 42 million was issued in 2010. About 15 million is currently callable. The bonds that were issued in
Excuse me, Mr. France, can you speak a little closer to the
Oh,
microphone?
I'm sorry. The bonds that were issued in 2010 have a variety of interest rates associated with them, ranging from, for the callable maturities, ranging from about 4.5%, all the way up to 5.93%. So in 2010, the 2010As and the 2010B bonds had a 2030 final maturity, so they're issued for 20 years. The 2010C Gateway bonds, those were refunding bonds that dated all the ways back to the original Gateway financing structures in the early 90s, and that has a final maturity in 2023. So it's relatively short. So when we're looking at refunding, like I said, the interest rates vary. They all have a call date, and they all have a call date of June 1, 20. So the bonds maturing on or after June 1, 21, we can refund at par. So all the interest associated with that is gone, essentially, from investors, and that's where the savings comes in. And we can refund those on June 1, 20. So when we're looking to refund bonds, we can either wait until closer to the call date, or we could issue taxable bonds today under the current tax code. An important thing to note when we're talking about these particular bonds is all three of these bonds were originally issued as taxable bonds. So if we wait, we couldn't issue tax-exempt refunding bonds. All else equal, tax-exempt rates should be lower and would be lowered in today's market than taxable rates. Just briefly, why are we here? Interest rates are really low. By any stretch of the imagination, they are low. They are relatively flat, but again, they are low. In the last cycle, or not literally last cycle, but since the peak of this current run back in November of 18, the 5-year Treasury, which is kind of a benchmark for these rates, was about 3.05%. This morning, the 5-year was at a 167. So clearly a nice run in rates. Another reason that this makes sense, unlike a home mortgage where we can refinance for, you could kind of keep pushing out another 30 years, we're not extending the final maturity on these. So a nice little key here is why we're looking at savings is back in 2010, we issued 20-year bonds for a couple of these deals. Those have a 5.93%. Now that 20-year rate, that final maturity 20-year rate, that's a 10-year bond today. So now we're looking at a 2.86% on that bond. So that differential, that gap, that's true savings to the county, and that's why we're looking at it. So what are savings looking like? There's a lot here, there's a lot behind these, there's a lot more in addition to all these numbers, but additional a couple $100,000 in total savings to benefit the general fund mostly. There are repayment sources for each one of these separate, but the annual savings that we're looking at in 2010 for the 2010As, about $170,000. The debt service on those bonds that we're taking out right now is about $1.375 million a year. 2010Bs, it was about $900,000, and the 2010Cs, about $5 million. And the amount that the general fund contributes to debt service on all of these, the annual savings numbers would be under that, so it would be, this could truly benefit the general fund. So we're looking at, again, as Mike was pointing out, $3.3 million in PV savings. Overall, that's about 10.4%. A guiding principle, again, a guiding principle, not an absolute, that the GFOA recommends is 3 to 5%. So we're well in excess of those guidelines. And then again, we're essentially switching out 5.5% bonds with 2.75% bonds on average on both. So again, that's true savings to the county. These are only estimates. There's, we'll know what those final savings levels are whenever we get to the market. We're currently expecting that in late January of 20. So we're just looking to move as quickly as we can and take advantage of the rates. And with that, I mean, just very simple, very brief, but happy to entertain any and all questions.
Questions by my colleagues? Councilman Tron.
You indicate that it's not an exact science at this point because we don't know what we're going to sell the new bonds for. Mm-hmm. But you could have a pretty good track record, I think, as far as being able to identify the savings dollars, couldn't you? I mean, within a pretty tight range. You know,
Sorry to.
Yeah, I mean, it's pretty identifiable within a range. You're going to be able to peg it within, I would think, a few $100,000 at least minimum.
I would think so, yeah. And what we're looking at right now was based on Friday's market.
Yeah.
Now, we had a decent job report. I'm sure you're aware of that. Yeah, decent.
That was damn good. Come on. Jeez, oh, man.
I'm a bit of a skeptic sometimes, but it was a damn good job report. How about that? Yeah. I'll agree with that. So rates increased a little bit, but they increased to where they were back in early to mid November. So rates go down, they come up, they do fluctuate. So even with that jobs report number that came in strong, we're still kind of where we were about a month ago.
Yeah, I'm just trying to get to the fact that you're indicating that there's going to be north of what looks to be $3 million worth of savings.
Mm-hmm. Yeah, in terms of PV in terms of PV savings, yes. There's also we do believe that these are somewhat conservative because there's a couple of pots of money that we still need to talk through and how best to use those to make sure that we're satisfying budget issues and some legal requirements in the documents. But there's a good chance that, especially for the 2010B numbers, those commercial redevelopment numbers, those could increase rather substantially. In terms of timing, we just wanted to get this approval based on a conservative estimate, right?
So we're picking up $3 million worth of savings. It's going to go into you said it's going into the budget? I don't remember us discussing this in the budget.
Well, it's going to go into the general fund, but
Yeah, it'll go in the general fund. Does anybody on this body remember us talking about $3 million savings that was going to be reflective, that could be used for budgeting? Huh? I know. Well, no, we're actually doing a new program with this. This is not,
There was
this is,
some discussion during the budget process that this might be possible, but I don't think it's reflected in the budget numbers.
my point, yes. So we're going to be asked to increase the, I believe, the HHS levy to help fund money going into the general fund to the tune of $5.5–6 million. This represents three right here that you're finding just because of this action right here.
I just need to confirm that with the budget. Is it in, do you know if it's in, Maggie, or no? It's not, okay. So
There you go.
confirms
We
it.
just found another $3 million. Thank you.
Sure.
The 3.3 million, is that on an annual basis, and for how long will that savings be achieved?
I think if you just look at the chart there, it tells you pretty much year by year, so that should be the total savings.
that 3.3 million, that's the net present value of the cash flow savings. So in total, the total savings will be about 3.7, almost 3.8.
So it's
Over 10 years.
It's 3.8 million with present value of 3.3 million over a period of 10 years. It's not 3.3 million per year.
Correct.
Okay, so it's a relatively, so we're talking $300,000 or so per year.
No, we're talking 400,000.
400,000. Either way, a relatively small budget adjustment.
Relatively small budget adjustment, but I'm a big believer, personally, I'm a big believer that, any savings is good savings. As long
I'm
as-
not in any way. I'm not in any way suggesting that it's not worth doing. It's totally worth doing. I'm just saying that it's not large enough to significantly change the HHS levy calculation. Are there other bonds that we have outstanding besides these that we might consider refunding, or is this kind of it?
No, Mike Chambers again, there is other bonds, and we took a stance about a month and a half ago to wait until January 2020 to then take a look again at the market conditions and move forward at that time. So there is going to be potential savings, but we're going to wait and stick to our initial judgment to wait until January to make the final decision.
And how much could those amount to? Could it be as much again as these, or is less, and this is the major chunk?
So right now, we are looking at, so the total par amount of these is about 33 million, give or take. There is a 2012 general obligation issue, as well as another non-tax revenue issue that have call dates of next year that we are looking at, that we're targeting for, like Mike said, just really revisiting next year. And we're in active discussions right now, really what this all looks like. But that's over 225 million. So the savings could be significant.
Could you define significant?
What's that?
Could you define significant?
Significant relative to these, yes. A couple $100,000 for the general obligation refunding that we're looking at, and hesitant to throw too many numbers out there right now, but at least over $1.5 million that I'm looking at for the that I'm thinking of, at least, for the medical mart bonds that we're looking at.
So it sounds like for these, it's a larger dollar amount of bonds, but maybe the interest rate differential is not as large because you're not talking about larger amounts than these. You're talking somewhat smaller amounts. Is that correct?
For these, yes. For the others, again, there's a couple of months of wiggle room there of where interest rates could go. That's always an eight ball. It's a guessing game at this point. But if rates generally hold true, we should be looking at presenting this committee with another set of refundings early next year.
Could you explain again what the advantages and disadvantages are of moving on this particular item in January of 2020 as opposed to waiting till the call date of July 1, 2020?
Yeah, so with these bonds, they were issued as federally taxable bonds for private payment reasons. For the other bonds that we're looking at, they have December 1, 2020 call date, so another 6 months. But the analysis there is, because of the change in tax code, if we do them, say, on the same timeline as these, we would have to do them as either federally taxable or slightly more expensive refunding technical bonds. So it's if we wait, we can do them as tax exempt. Tax exempt have lower interest rates than taxable. So it's a bit of a apples and oranges comparison between these bonds and the other bonds.
Now, focusing just on these bonds, do we incur some kind of penalties if we do this before June 1?
Under all these numbers that are already kind of baked in to it's about an $80,000 cost in terms of the difference between what you're paying on the bonds and what you're earning in the escrow that we have to put the bond and proceeds in. And that's about 6.5 basis points. So it's not a significant cost.
So what you're saying is that the interest rates can go up 6 basis points in a heartbeat, and that you'd rather pay the $80,000 than roll the dice and see what's behind the curtain on June 1, 2020. Is that the general idea?
That's the general idea. Put in different terms, incurring $80,000 of cost for $3.3 million in benefit.
Mm-hmm. Okay. Are there other questions? We'll go with Ms. Baker first, who hasn't spoken yet, and then we'll go back to Sean.
Thank you. I'm just curious, does this have to be done at the end of this year? Or could we have looked at this back in November 2018 when we saw that things were dropping? I mean, could we have done this 6 months ago, or?
We could have done this 6 months ago, but the savings would not be, but 6 months ago, the savings were, I don't recall what they were off the top of my head, but they were still good.
Okay, I just see the arrow dropping for the past year.
Mm-hmm. Yeah, so as rates go lower, time gets closer to the call date, that's
Right.
the perfect storm for more savings.
Okay, thank you.
Councilman Sean.
It sounds like you are in the process of analyzing an awful lot of bonds, that whether or not it makes sense with the rates being as cheap as they are right now. Mm-hmm. This is almost an all-time low, I would think, on that. Do you have an idea as to how many millions and millions of dollars of bonds we're talking about? Just not with the savings, just the dollars of what the values of these bonds are worth.
In terms of
Total pool size.
In terms of the par amount outstanding?
Yep,
of
par amount, yep.
Yeah, so $33 million for the county here, and then another 225 that we're looking at.
Okay, so this is actually significantly smaller than what you're talking about the other one, right?
Yes,
As far as the value. This is less than, just barely a tenth of what the other one.
correct.
So 10 times is what was still coming down the road.
Potentially, yes.
Would the savings be even comparable to potentially to 10 times this?
It's hard to say because it's not hard to say. It's hard to put a relationship between these bonds and the other bonds because on these bonds the term is a little bit different than the other bonds, and the other bonds were issued under tax exempt regulations. So and under tax exempt pricing. So those have different interest rates that we'd be taking out.
Maggie, maybe.
Okay.
Oh,
Okay. Yeah.
Ms. Keenan, have input there on what the
Yeah,
size of the
so-
pool is?
She just commented that we're looking over $2.5 million in savings annually.
So 2.5 million additional savings, plus the I'll just average it out at $350 million, or $350,000. So 2.5 plus that, so we're $3 million in savings per year? Is that a correct assumption?
If everything plays out, yes. Yeah.
Well, I mean, there's no reason to think it shouldn't. I mean, it's just a straight mathematical calculation. You're gonna pay the good folks at McDonald Hopkins something to do a reissuance, and it's just a straight numbers crunching, and you put it all together, we're gonna get a lower interest rate for the taxpayers, and it's gonna save us, in theory, $3 million.
That's correct.
And where is that in the budget?
It's not.
And yet, that's gonna go into the general fund, right? That $3 million?
I'll have to check if all of it's gone. I'm not sure if it all is. I'll be honest with you, I'm not sure.
Is any of it HHS?
It's probably
Bonded?
going to be general fund for the most sake, but
I would think it's all general fund, but
Yeah.
I'm still learning them all, so you got to bear with me a little bit. you
that's
know,
okay.
so, yeah.
Yeah.
It's all,
It's all.
assume it's all general fund. So we're asking the taxpayers to fund by the HHS levy, refunding the general fund to the tune of $5 million per year. Is that, if I'm understanding what the levy, reading the documents correctly here?
I agree with what you're saying, yeah.
Okay.
Got them there.
And yet, we've got $3 million that's not even been budgeted for. Thank you.
Am I correct that we're achieving the savings on the refunding? Both because interest rates are lower and also because the new bonds we're refunding will have a shorter maturity? Because we're sticking with the same end date, is that correct?
That is correct.
That's correct, okay. Okay. Is there any further discussion? Not seeing any, so I'm going to ask for a motion to move Resolution 2019-0276 to the full council with recommendation for second reading suspension.
So move?
Is there a second? Second, okay. Any further discussion?
I am wholeheartedly in favor of accelerating the savings on these other, so we can get the full $3 million. Why wouldn't we put this on a fast track? So I'm encouraging this one to go on a fast track and get the rest of them, get the next one for us on a fast track too. Thank you.
Excuse me, Mr. Chairman, just to be clear, we're talking about the substitute, right?
Yes, that's correct. The motion is, it's good to state that on the record, so thank you for that. It's Resolution 2019-0276 as substituted. The motion is to refer that resolution to the full council for second reading suspension. Seeing no discussion further, all those in favor say aye. Aye. Any opposed, say no.
Excuse me, Mr. Miller, did we get a second?
Yes, we did. It was
Ms.
by
Brown.
Ms.
Thank you.
Brown. Okay. Do we have a motion on Resolution 2019-0277?
So move?
It's been moved and seconded. Any further?
As substituted.
As substituted. Any further discussion?
And as for second readings, I don't know.
It's second reading suspension. All those in favor say aye. Aye. Any opposed, say no. Ayes have it, so referred. And do we have a motion for Resolution 2019-0278 as substituted for second reading suspension.
So move?
Okay, it's been moved and seconded. Any further discussion? Hearing none, all those in favor say aye.
Aye.
Any opposed, say no. Thank you very much. And all of the resolutions are recommended to the full council for second reading suspension. And is there any miscellaneous business? Hearing none and there being nothing further that holds our attention, we stand adjourned. Thank you very much.